House prices across the nation slide with worse to come. Financial advice ready for an overhaul. And Tesla sales globally disappoint. It's Tuesday, the 4th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, a very quick mention before we get going of our new podcast as well. We mentioned this yesterday. Fear and Greed has teamed up with Canna Campbell from financial literacy platform Sugar Mama TV to create a new podcast called How Do They Afford That? It comes out every week. It's full of tips and hints and things on making your money go further, kind of managing your household budget, investing while you've still got a mortgage, all that kind of thing. Episode 1, of course, came out yesterday.
It's great, Michael. I listened to it and I got my kids to listen to it. What I really like about it is that it's easy to understand information about managing money. The other thing, which I always think with a lot of these podcasts, I should know the information. And it's amazing how many small snippets I thought, I hadn't thought about it that way. So it's fantastic.
Yeah, and the thing is, it had to be easy to understand because when we're talking to Canna about these things, it's actually... I was kind of put on the spot a little bit at times and thought, I actually don't know how this works. And so I thought rather than just kind of pretend to know, sometimes you just go, I know this. I thought, you know what, I'm just going to ask. And it kind of takes you through the nuts and bolts of really kind of basic money management and trying to make your dollars go a little bit further, which is kind of what we need at the moment. It's called How Do They Afford That? The link is in today's show notes and you can find it basically wherever you listen to podcasts. But we have a show to do here first, Sean, and you've got an interview coming up today with a biotech CEO, Bob Prue, who is the CEO of the ASX-listed company Imagine Biosystems.
That's right. And Bob at Imagine is developing technology to better diagnose cancers, particularly breast cancer, using imaging rather than more invasive treatments. And we go through that. It's really interesting. I learnt a lot in this interview. We also talk about why a company, which is San Diego based, is listed on the ASX and the benefits of that. Great interview with Bob.
Yeah, absolutely. I found it really fascinating. The main story this morning, though, Sean, is all about house prices. And across capital cities, they fell by 1.4% during September. That's the 5th monthly decline in a row. And prices are now falling at their most in more than 40 years.
Yes, the core logic figures don't make pretty reading, with all capital cities, except for Darwin, where it was flat, experiencing declines. Sydney and Brisbane led the way with falls of 1.8% during the month and 1.7% respectively, and it's houses that are falling faster than apartment prices, just like houses rose faster during the pandemic. Regional prices are also falling, down 1.3% across the month. Now, the key reasons for the declines are poor affordability, a rise in new listings, cost of living pressures, a collapse in home buyer confidence, and households spending more on services. But the big one is rising interest rates. 12 months ago, a borrower could take out a fixed rate mortgage at 2%. Do it today, it's closer to 6%. Variable mortgage rates have gone from starting with a 3 to more than 6%. That is going to dampen house prices.
Yeah, certainly will. And of course, though, Sean, as you mentioned, it does come after a run of very strong house prices.
Yes, that's true. House prices jumped nearly 29% between their pandemic low in September 2020 to their high in April this year. Since then, the national average is down almost 5%, while in Sydney it's down 9% and in Melbourne it's down 5.6%. If you're looking for some good news in the numbers, and there's not much there, then perhaps the fact that the pace of falls in Sydney and Melbourne have tempered somewhat the last couple of months will satisfy you, but there's not a lot of good news.
Sean, and I think that the question that you would be expecting me to ask you is, how much further will prices actually fall?
Yes, well, the full impact of rate rises hasn't hit yet. That's worrying. People have big savings buffers to rely on, and many won't come off their fixed rate until next year and beyond. And there are more interest rate rises in the offing, of course, with the Reserve Bank Board meeting today and tipped to lift rates by either 25 or 50 basis points. Our own Stephen Koukoulas reckons the national average capital city price will fall by between 7 and 10%. Remember, it's currently down 5%. Reserve Bank Governor Philip Lowe recently said he thought about 10% sounded right. But AMP Shane Oliver thinks it will be closer to between 15 and 20%. Then the next question is, when will it bottom? CoreLogic's Tim Lawless reckons it will be in the first quarter of next year. On the positive side, auction clearance rates have increased from a low of around 52% to be steadily tracking in the low 60s. Dr. Oliver says ultimately factors such as home deposit schemes, changes in stamp duty rules in New South Wales for first home buyers, the tight rental property market and rising immigration will help find a floor for prices, just not yet.
Not yet. Okay, how about local markets? What happened yesterday?
With the public holiday in some states across the country, including New South Wales, volumes were low. The S&P ASX 200 finished down 0.3% to 6,457 points. All the banks were lower while the big miners ended higher. Woolworths closed down 1.3%, while gaming machine manufacturer Aristocrat Leisure, QBE Insurance and diversified miner South 32 all closed down around 2%. The standouts were the energy companies, with both Woodside and Santos up more than 1%. Property giant Centre finished up 1.6%. There was just a bit of corporate news around yesterday. The worst performer on the market was West African Resources, down 10%, following a change in the military leadership in Burkina Faso on the weekend, where its Sanbrado gold operation is located. Core Lithium fell 4% after completing its $100 million placement. Fund manager Janus Henderson dropped 5% after announcing changes to its board. And A2 Milk fell a couple of percent after renewing its import and distribution arrangements with China State Farm Agribusiness.
And what about global markets?
Well, not much good news there either, really. Brent oil is sharply higher, heading back towards $90 a barrel after OPEC reportedly is thinking about cutting production. With the Aussie dollar weak, it's trading around 64.4 US cents. We ain't going to get much relief at the petrol bowser anytime soon. Iron ore has a major impact on Australia's big three miners, BHP, Rio Tinto and Fortescue Metals, as well as the federal budget bottom line. Its price has fallen about 3% over the past 24 hours. Even coal prices have come off a touch, though they do remain very, very, very high. In fact, we're talking record highs here. And gold is trading around $1,670 an ounce.
Sean, between house prices, local markets and global markets, it doesn't seem like there's a huge amount of good news around today.
No, I don't think anyone really took a holiday yesterday either. It was all happening. It just keeps going.
Yeah, seems that way. All right, we'll be back in a moment with the rest of the day's business news. Sean, Australia has backed Ukraine's claims of genocide against Russia in the International Court of Justice and expanded sanctions against senior members of the Putin regime.
Australia has filed an intervention to the United Nations Court backing Ukraine's claims. The Albanese government has imposed financial sanctions and travel bans on a further 28 Russian ministers and senior officials involved with holding sham referendums in 4 Ukrainian provinces. That takes the total number of people sanctioned by the Albanese government to 871. Now, on Friday, Vladimir Putin said he had signed treaties to annex 4 regions of Ukraine after claiming referendums showed it was the will of the people in those territories. Australian Attorney General Mark Dreyfus said the government stood with Ukraine in bringing these proceedings against Russia before the International Court of Justice. Basically, we think that Vladimir Putin annexing those 4 provinces is a sham like the rest of the world.
Sean, we talk a lot on this podcast about financial advice and the importance of getting good financial advice, particularly when you're making investment decisions. Now it seems the industry is getting set for an overhaul, really, with some of the biggest super funds in the country supporting a proposal to deregulate the sector.
Yes, the problem with financial advice in Australia is that people just don't use it. They find it too expensive. They don't understand the value in it. So Federal Treasury has put out 123 draft proposals to overhaul the laws governing financial advice. Anyone in this sector will remember this has been going on for decades to create the system we have now. Now, some of these draft proposals includes the removal of the contentious duty to act in the best interests of clients and replaces it with a duty to give good advice. It also proposes making it easier for banks and super funds to give advice. Now, super giants, Colonial First State, AMP and Aware Super have all endorsed the proposals. In fact, retail funds and industry funds are working in tandem on this. Not many things can get those two groups to align. The counter-argument is that scrapping the best interest duty could harm customers. Now, I've got to admit I do work for some companies with an interest in this argument. For me, the bottom line has to be ensuring more Australians receive quality financial advice, particularly those approaching retirement.
Okay, Commonwealth Bank, Sean, presented its climate report late last week and has opted not to rule out financing new oil and gas projects, notwithstanding some of its competitors have done so.
Chief Executive Matt Comyn said the bank was deliberately adopting a posture of flexibility with complete transparency, adding that it was a chance to work across industry groups to help come up with an appropriate transition path. The country's largest bank also said about 3% of its home loan portfolio is vulnerable to climate change impacts from floods, cyclones and fires. In terms of areas it banks that are big emitters, agriculture comes in first, then home lending and then the oil and gas sector.
Sean, it really hasn't been a good couple of weeks for Optus, and that probably feels a little bit like an understatement. But the competition regulator provided some positive news on Friday, suggesting that a proposed deal between the telco's two biggest rivals could lessen competition.
That's right. The Australian Competition and Consumer Commission Statement of Preliminary Views about the tie-up in regional Australia between Telstra and TPG says it's worried about the impact the deal will have on competition between mobile network operators and on the concentration of mobile spectrum under Telstra's control. It says spectrum is scarce and a valuable resource, and greater concentration of ownership might be to the public detriment. Optus, for months, has been arguing against the tie-up, which involves TPG authorising Telstra to use spectrum which TPG owns, and Telstra providing TPG with mobile network services in some regional and urban fringe area. Now, a final decision is expected in early December. Meanwhile, yesterday, Optus said it had called in Deloitte to conduct a forensic review of its cybersecurity practices. Yesterday, the company said 2.1 million personal identity data were exposed during the hack, including 150,000 passports and 50,000 Medicare cards. About 1.2 million of the ID numbers, which also include driver's licenses and student documents, are active.
Sean, the auditor of the Star Entertainment Group, has some concerns over whether the gaming group has enough money to pay the fines that it might be facing following a review of its operations in New South Wales.
The Star faces a bunch of penalties from the state regulator, as high as $100 million each, and could be on the hook for multi-million-dollar fines from AUSTRAC as well. That's the financial crimes watchdog. Auditor Megan Wilson from Ernst & Young wrote that adverse outcomes could result in the Star not being able to continue operating without the support of its lenders. But the Star says it will have enough money on hand, and just in case, it's been in touch with its bankers. The regulator, the New South Wales Independent Casino Commission, hasn't yet indicated when the fines will be levied.
All right, moving on to overseas news now, and we mentioned this one at the top of the show, Sean. Tesla is struggling to get cars to customers, with 343,830 cars delivered worldwide during the past 3 months, which is actually down on what analysts expected.
Yes, it was still a record quarter for the electric vehicle manufacturer, but it does show that supply chain snarls remain. Tesla said it is increasingly difficult to find vehicle transportation capacity at a reasonable cost during peak periods. Now, part of the problem is that Tesla's workflow means it produces a rush of vehicles towards the end of the quarter, pushing up demand for and the cost of transportation. The US and China are Tesla's largest markets, and the majority of sales are of the Model 3 sedan and the Y crossover. But it's just interesting that it is running into supply chain challenges, which of course will hurt its bottom line.
And finally, Swiss banking giant Credit Suisse is teetering on the brink of being broken up or possibly collapsing.
Yes, there's plenty of speculation that Credit Suisse is this crisis's Lehman Brothers, though that probably overstates it. But the Swiss giant, which is a big player in the local market here in Australia, is in trouble. Basically, it hasn't made money for a long time. It's expected to lose around $2 billion this year, meaning that the net total in the past 8 years is a $500 million loss. Management are looking at all options: shrink it, focus on certain activities that suit its private banking customers, sell parts of it, split it up, and it needs to find money to do things. Watch this space on this one.
That is a big story, that.
Yeah, absolutely. It's really played out over the last 2 or 3 days, and I think the next week we'll find out lots more.
Okay. All right, up next is the Fear and Greed Daily interview, and your guest today, Sean, is Bob Prue, the CEO of ASX-listed Imagine Biosystems.
Yeah, that's right. We talk all about the imaging technology that Imagine Biosystems is developing and the trials it's running. Hopefully, it means that in the future, to diagnose a cancer, will be less invasive. That's the hope anyway.
What I found really interesting about this conversation is what Bob said about what they have to go through basically to keep investors engaged with the company, especially with, say, a biotech where you could go for quite some time without actually seeing results.
Yeah, that's right. I mean, because you spend literally tens or hundreds of millions of dollars without any outcomes, possibly for years. So Bob talks us through that and the efforts he makes, because their shareholder base is particularly retail. And so the efforts he makes to keep them engaged.
Yeah, it's a really interesting chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 4th of October, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And don't forget to check out our new podcast, How Do They Afford That?, wherever you listen to podcasts. I'm Michael Thompson, and that was Fear and Greed. Have a great day.